Kim here from the Traders Club to tradersclub.com. Thank you for tuning in for today's market commentary. We're going to be looking at Spider. We'll look at Qs, Diamond. We'll look at Google, Netflix, Apple, Tesla, and I do want to talk quickly about healthcare sector. I did write an article on that in my blog, so if you guys want to check that out. Let's look at S&P 500 here real quick. Obviously, you know, we've been talking about this level here, Fibonacci level. I have measured this move, and we came down precisely to first Fibonacci retracement level, where I can see the 38.2% at 202.10. We precisely found support in this vicinity. That's a level actually coinciding with the daily 100 SMA there. We found support there, and it's also the vicinity where 50 MA was residing. You can see that 50 MA was acting as resistance. This was back in September 17th there, and we had a pretty heavy sell-off there, and then we went up. We actually pulled back. We used that 50 MA as support. We gotten up. We came down, and we used that vicinity, right, where the 50 MA is residing. And also that 100 SMA is also there. Also is the vicinity where 38.2% retracement was residing as well. So this was a level where a lot of technical levels were colliding, and when you see stuff like that, you pay attention, right? So we saw that kind of a, you know, three black crows type of deal here. We got bearish candles there. And then what we saw is a very, very strong bullish engulfing pattern, right? When you see bullish engulfing pattern like that at an important pivot or support level, you want to see a follow through. And then you saw kind of a pause day on this day here last week, and then we had a strong bounce. And what we're seeing is another pause day. Really though, at this point, nobody truly knows if we're going to pull back or continue higher. If anybody's saying they're going to see a, you know, some kind of heavy sell-off here, they're just guessing, because obviously people are saying stuff like that here as well. What we got going on right now is that we saw this minor term. First of all, we have an intermediate term uptrend cultivation, right? This is a potential level of higher low, right? We've got the high, higher high. We got the double bottom here. This was a neckline. We broke that, retested it, and then we are cultivating intermediate term higher low. And we're in the minor term. What we got going on is we're still staying above 10 MA, 20 MA, 50 MA here. We're still staying above these, you know, moving averages on this daily chart. What we got going on as far as a candlestick analysis is concerned, we have potentially be what we looks like potentially be some kind of a bull flag. Any of these flag patterns needs to be confirmed. We had a bear flag. We gotta be, you know, fair about that, about these flags. You saw that bear flag here. We saw a gap down. We continue lower for 2 days. What we have is we got you know, like opposite of that bear flag. So it's a bull flag here, and only these flags can be failed. So what we need to see is we need to see a confirmation of that move or of that pattern. So we have, you know, we had like a bear flag or bull flag here, and we saw that confirmation right there, right? You saw that? We got up, we pulled back a little bit for about 4 days, you know, and then we formed that bull flag, and then what do? We saw that confirmation. That's what I'm talking about, that confirmation, because this can fail. You know, bull flag, just because we have bull flag does not mean that it must move to the upside, but upon confirmation, we can forecast that it may continue higher, right? We saw something about kind of like a, you know, like a stair-step continuation pattern right there, and then what do? We saw a confirmation. You see that? You see that confirmation right on that 10 EMA. Also, 10 EMA has been acting as strong support here and here. So this was important level on a minor term sentiment. And we threw another bull flag right here, 3 days. Right? Again, we need to see what? A confirmation. We saw that. And we saw about a 1 week of a bullish run. So if we want to forecast, you know, another, you know, 4 or 5 trading session of bullish run, we want to see a confirmation to the upside, something like this. If you can see something like that in the next couple of days, so we may have another down day like this, and that could still be considered as a bull flag there. And if we see a follow through to the upside, then we can possibly see continuation for another 4 or 5 days. However, if we fail from this bull flag, then the next level of support to watch is that 50 MA and then 100 SMA, potentially retest that 38.2% retracement level. Right? Let's look at NASDAQ here. And I'm not going to spend too much time here. It's pretty much similar sentiment going on here, is that we kind of looks like, we went up, we're above 1020 MA here. We kind of looks like some kind of a, stair step continuation. Again, we need a confirmation of that. We do have a bullish uptrend support, continue to be respecting this vicinity here. That's a good sign. And then we got some kind of a, neckline here also. Getting respected last time here. Again, the 50 MA strong support. It was resistance here and then active support. And now we're seeing that higher low, but we're seeing a little bit of a kind of a pause, right? Are we going to have some kind of a pause before going higher? Maybe something like this with that confirmation. So we need that confirmation. If we don't see confirmation, if we see this thing falling, then you want to see some of these moving averages here, 10 MA, 20 MA, and 50 MA as a potential support in the next 2 to 3 days. Dow Jones Industrial Average, same thing going on here. 50 MA acting as support, 50 MA acting as resistance. Now it's a pivot, right? And then now we're back above 1020 MA. Same thing happening here. Two kind of dojis going on. Looks like more like a bull flag. Looks a lot like something like here, and possibly something in this sort, right? You can see that 10 MA there, and then we saw the follow through, and we saw about a week of bullish run each time after we saw that bull flag pattern happening and confirming, right? Bull flag alone is not enough. We need to see a confirmation action next few days. Again, if we lose that, next level to watch as a potential support is 10 MA, 20 MA, and 50 MA. 50 MA is likely the more stronger support because it was acted as strong support here and acted as resistance. So looking at the indices, the sentiment is still bullish. In the minor term, we have a bull flag formed. So upon confirmation, I forecast that market will continue higher, probably grind higher for the next 4 or 5 trading sessions upon confirmation. If there's no confirmation, if we fail in this bull flag, then potentially come back down to some of these level of 50 MA or these low to retest that level there. Quickly, let's look at Google. Google continued to do very, very well. I recently wrote an article here. We recently actually closed out about 70% of our positions there. This is where we long about 550-ish or so. But our target was 800, so there's some more room to go, and obviously trend is uptrend in the intermediate term and primary term. 10 EMA continue to act as support here. These are the things that I'm talking about. Sometimes we get these flags and it looks like it's gonna break out and then we fail from it, and then I told you guys on this indices, watch 10 and 20 EMA as the next support, and that's kind of exactly what happened on Google, because we threw that bull flag, we attempt to break out, we fail from it, and then exactly that's the level, the 20 EMA acted as support, just like this here. This is 20 EMA and 20 EMA. You can see how this level continued to act as support. Why? Because we're still in a minor to intermediate term uptrend. People are buying the dips, right? This is a level where people are buying the dips. Now we're back above 10, 20 EMA. We're just holding above it here. So if he falls, again, 20 EMA is a level to watch, but sentiment is definitely bullish there on Google. Netflix, also very, very bullish stock here. Obviously, we have a very, very strong primary term uptrend support holding here, right? So primary term trend is up, is healthy. The benefit of the Dow continues to go to the buyers. If you want to go long on Netflix, what I really like to see, instead of going long here, maybe wait till see it pull back and retest this level as a new support, right? This was prior resistance. Potentially, that's the level where 50 MA or 20 MA is potentially meet when this thing possibly pull. I'm not saying it's gonna pull back. What I'm saying is if it does pull back, this is a vicinity to watch, and upon confirmation of bounce, you can potentially enter and ride back up to potentially 140, 145 or so. But it could continue higher though, but we're hitting that resistance. We threw some kind of a hangman type of deal. We got some kind of doji there, but again, doji alone is not enough. But if we gap down in this vicinity right here, because this is a resistance level, let's say if this thing gaps down, then we possibly have some, and then we have a follow through to the downside, we potentially have some kind of an evening star reversal in a minor term though, and that could potentially gap things this down to about 20 to 50 MA here, worst case scenario, possibly gap back down to this primary term uptrend. Only if we see this level getting rejected. Otherwise, if this thing continues higher, we may continue to grind higher. As the trend is up, we're back above all these moving averages. So the benefit of the Dow still goes to buyers. Apple is struggling a little bit. We talked about the gap area on our last market commentary video, that every time when there's a gap, market gets, Apple gets a little bit nervous. So we trying to fill this gap here. We got up and we threw a little bit of a potentially minor term evening star reversal pattern here. If this thing continues to come lower from this point on, next level to watch is supports this gap fill area. I really think we probably gonna get stuck here for a little bit. I think like a 120 to 111 area. We may stay here for a little bit before we can possibly get back up here. I know some of the weekly charts I talked about, there are some signals that Apple's reversing, but as far as like the minor term is concerned, I think we're going to get into a more consolidation phase. We may not see so much a huge move here, but I think next level support to watch is at 50 MA to watch, and we got potentially some kind of support going on here as well. So some of those level, but I think we're probably going to be kind of range bound for a while on Apple. So that's the level to watch. Currently we are staying just slightly above 1020 MA. So if we lose that level, next level to watch is a 50 MA and the 100 SMA and this gap fill level, right? The worst case scenario, you want to see this thing holding 111 support that we found back in November 16th there. Also, Tesla. I didn't like Tesla for a while. I've been telling you guys that I don't want to go long on Tesla, and it's just been pretty choppy here. We have a downtrend resistance coming up here. We potentially have some kind of double bottom, but that's not going to be confirmed until we get above 232. So even if we get above 232, there's a pretty strong support or resistance coming down. So there isn't a whole lot of move that you can make. So I really don't like Tesla here, unless like you guys are day trading or something very, very quick. So I really wouldn't like Tesla until probably get above 266.43. Even then I would still be skeptical, and I would have to watch and see what I can do from there. But right now, Tesla sentiment, obviously primary term sentiment, we're in this kind of a consolidation channeling type of action. So really, we are potentially still in an uptrend, but it just really the uptrend move, the hype has gone down, so we're pretty much moving sideways, trying to decide what's going to happen in the long term. So this is a time where I want to get away from it, not want to be part of that. Lastly, healthcare sector. I read an article here. I just kind of quickly go through it, and some of these things, if you guys want to go look at read this through. I think this is a trace that I talked about. There's a weekly chart here. Definitely some of the levels that looking at long term, the last time we got down to this extremely oversold level on this weekly RSI was back in 2012. It's almost like every year and a half or so we saw a decline or correction, right? So it's almost like back in 2012 when people start buying, they're probably expecting some kind of correction. This market knows what the majorities are thinking, right? So then we don't see a correction or a steep correction for another 3 years, right? And then so then the RSI is telling us there's been a weekly or primary term uptrend, never came down to a downside or the bottom band, which is extremely oversold status. And this is the first time since 2012 that the healthcare select sector has come down to extremely oversold status. Again, this is first time in 3 to 4 years, and now we are bouncing, we're expanding back up here. You can see that MACD after decline, this is the first time seeing the bullish crosser. Again, these signals are just signals until they can be confirmed and substantiated. And so again, this is one of our proprietary technical tool there, and what it's showing us that we're seeing strong accumulation. Last time in 2009 we saw the crash, a huge came down, extremely oversold status, and then you can see the huge spike there. What this was telling is that there are a lot of dip buyers, right? They're like clandestine buyers. They're accumulating. They think this is a good buy. They want to hold things for a while. So this is where a lot of strong accumulation has happened, right? Same thing happened today, though we didn't see a crash, but in 2015, just a couple months ago, you can see that we got into that extremely oversold strategy. So as far as the sentiment is concerned, in this indicator, it's indicating to us that this sentiment is very, very similar to 2009 crash, though we didn't see the price action actually crashing or getting into downtrend. We just saw a very, very sharp decline. And then look at the strong accumulation, very, very similar to 2009, also to late 2010 and late 2011. So again, and look at this, weekly 100 SMA acting as support precisely. You can see that how perfectly it is lined up, acting as support there. So this is a trade setup that I wrote here. So let me actually go back to a chart here. And I'll end video with this. And obviously this is a level of neckline. That's what we call a neckline. So we've been looking at the weekly chart, right? So now we're looking at daily chart. This is left shoulder head, right shoulder there. It's not confirmed as of today. What we need to see is this thing getting back above, you know, like 73, 73.50-ish level. What you want to see, because there's a lot of head fakes and traps. So what you want to see this thing getting back up and hold above 35, 73, 73.50. Hold above this level for 2 to 3 days or a couple days at least. Make sure we stay up, then potentially can, you know, possibly engage. Let's say if there's any incident where it continues higher and we pull back. If it continues higher and pulls back, you want to see this 70 to 72 level get holding, right? 70 to 72 level holding as new support level, because that was all resistance. So let's say this thing going up, pull back. This is a prior resistance, and that level becoming prior support. And if this level potentially becoming a next level higher low, and in that process, we're confirming some kind of a primary term uptrend support as well. So pullback is not something we should be fear of. Pullback is actually a good thing, because we embrace the pullback because that pullback cultivates an uptrend, right? But let's say if this thing continued higher a little bit, we held here for a little bit, and then we failed. If that's the case, you want to make sure that this 69.70 level holding. If we get any below that level, things may get hectic from that point on. And at that point, 67.50 is a level to hold. And this is what I would call 67.50, or what I would call a must-hold level. Because if this thing could come all the way down here, and we could still be possibly in a primary term uptrend though. So anywhere above 67.50 is a level to hold if we get up here and we start to fall back again, right? But it's a lot of times what could have, when we're seeing this kind of setups here, you know, this market is not going to make it easy. It's too easy to see invert head and shoulder. But sometimes it just works out. So sometimes what you need to do is you just got to go for it once the setup is there, and then give it enough leniency. Give enough room. Don't place your top right there so then you just get chopped out. Give enough room so you can move around, and then, you know, sort itself out, and then possibly, you know, and in my next article I'll talk about some of the targets on healthcare sector upon confirmation on this pattern here. Okay, so well, you guys have a great night. If you guys have any questions, you can always email me or follow me on Twitter, 2KKim, or StockTwits, and my blog at 2tradersclub.com. Have a great night. I'll talk to you.